please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So we're tracking for you this evening. You're watching CNBC TV18 and this is Reporter's Diary. Straight on to all the action from Dalal Street. Bank stocks dragged the market down in the second half of trade, but it managed to end off the day's low thanks to the rally among the IT stocks. The Nifty closed about 0.02% in the red. The Sensex managed to hold on to that 34,500 mark. Banks, however, saw a sharp fall led by ICICI Bank. That index closed with cuts of about 1%. The mid-caps ended with cuts of 81 points. And from Dalal Street to all the action in the currency market, the Indian rupee weakened to a 14-month low against the US dollar and closed at 66.90 versus the dollar. Meanwhile, bond yields also rose due to a rise in its yields. Rupee depreciation adds to the woes. Latha Venkatesh is joining us with more details. Latha, what is the reason for the weakness that we're seeing in the Indian rupee?
Well, the rupee has been weakening for some time now on a mix of poor trade deficit numbers, or rather high trade deficit numbers because of exports not quite firing, and of course crude going to 75 only added. But the latest move, that's what's happened over the last 48 hours and 24 hours, is entirely a dollar strength story. The dollar has strengthened, the index has gone to 91, 92 levels, and so there's a euro weakness as well, and there is a weakness of all emerging market currencies. It's just this combination. The US 10-year Treasury yield has touched 3% after 2014 for the first time. And if it touches 3.04, it will be the first time since 2011. That plus the strong dollar has led to risk off globally. So you've seen most equity markets sell off and most EM currencies also slip. But a current account deficit-ridden country like India falls a little more than others at a time when the dollar strengthens, and that's what we saw today. We understand that there was a bit of dollar supply from state-owned banks. You normally read it as the Reserve Bank supplying dollars around 66.82 thereabouts, but it looked very brief. Usually the Reserve Bank doesn't stand in the way when it's a global fall in EM currencies or any other global trend at play. They only come to smoothen excessive falls or volatilities. The expectation of the dealers is that the near-term negatives are all priced in. Both our trade deficit concerns, the rise in the crude prices, as well as the dollar strength are all looking priced in because the rupee has fallen rather sharply over the last couple of weeks. But if there is a renewed strength in the dollar and oil rushes over $75, then of course there would be fresh negatives. Otherwise, looks like, there is always a tendency for the rupee to find some support around a round figure like 67. So hopefully we won't cross 67 in a hurry unless things change. On the dollar bonds, it's just more of the same, and the US yields touching 3% added to an already weak market sentiment in India. With the rupee falling, obviously that's more inflationary. Everything you import is more expensive, so that also abetted weakness in Indian bonds.
So the rupee there at a 14-month low. Thank you so much for taking us through those details, Latha. Moving on, ITC is not giving up on the 1 lakh crore rupee revenue target by 2030 for the FMCG business, but it could be delayed by a couple of years. That's the word of optimism and confidence coming in from ITC CEO Sanjeev Puri. Speaking exclusively to Shireen Ban, he revealed that ITC will soon foray into new categories to drive FMCG growth. The company will also launch new products like frozen snacks as well as dairy beverages in the year ahead.
You took over in February of 2017. You've seen the GST rollout, and all of this has had a fair degree of disruption on the business ecosystem. Given where we stand today, and the fact is that consumption continues to be the big growth driver, the big growth engine, what are you seeing in terms of the macros before I start to talk to you about the micros?
First of all, let me say that GST was a very welcome step. It's indeed truly a transformative reform that is going to create a common Indian market, and it augurs well for the economy. So whilst there were some hiccups, and I would say that in fact hiccups are perhaps less than I thought that we would have.
Okay.
But the good thing is they are behind us, and we are much more stable today.
And do you get a sense that at least on the taxation front, on the regulatory front, that we are now in a stable regime? Is that what you're factoring in? Because the cess is now, and the changes with the cess are over and done with. GST collections are picking up, so the pressure to revise the cess perhaps has abated somewhat. What is your own sense on the tax environment?
Well, it's difficult to predict, but I'm an optimist, so I hope that that's what will happen during the year.
Let me then ask you about the micros and start by asking you about the cigarette business, because while it continues to contribute about half your revenues, it is 90% of the EBIT. What is the trend now in terms of volume growth? Do you believe the decline that you've been witnessing quarter after quarter is now on the way to being arrested?
Well, as you know, the big concern that we have always had with the cigarette industry is that with high increases in taxation, which is about more than 200% in the last few years, the unintended consequence is that the legal industry takes a blow and illegal grows. And today, 1 in 4 cigarettes in India are actually illegal. The
target for the FMCG business is a fairly aspirational one at 1 lakh crores in revenues by 2030. You know, are you on track to be able to get to that number? I'm looking at your revenue picture for FY16, 9,751 crores, FY17, 10,522 crores, 9 months FY18, 8,277 crores. Are you on track to meet that number, or is it more aspirational in nature?
So you're right, it's an aspirational target, but nonetheless we are committed to that target, definitely, and that's how we are gearing up the enterprise, and that's the reason why we continue to widen and deepen our portfolio. We continue to strengthen our reach, our direct distribution. We are entering newer categories, and all of this is really directed towards achieving the goal that we have. Yeah, of course, the growth rates, I do understand, need to be much higher to be able to get to that figure by 2030. Yeah, so it may get delayed by 2-3 years, that's fine. But we are really gunning for that figure, and that's how we are organizing ourselves to get there. We are not giving up on that target.
And you can catch that entire conversation at 7:30 p.m. today only on CNBC TV18. Organizations are increasingly using digital technology to change the way they do business. Now, increased connectivity means a heightened exposure to fraud, corruption, and other risks. EY, in its biennial global fraud survey of 2,550 companies across 55 countries, attempted to gauge fraud in businesses. The findings are quite interesting. The survey found that there has been no reduction in fraud and corruption in the last 2 years, with most companies claiming that dishonest practices help in the survival of business. When it comes to India, 40% of the 50 companies interviewed admitted to paying a bribe for businesses. In fact, India ranks 17th among 55 countries surveyed, where bribery is used to win contracts. Shireen Bhan caught up with EY's Arpinder Singh, Alina Arora, who is the partner at Luthra & Luthra, and Sharat Sanghi, the MD and CEO at NetMagic, and sought their views on the survey. Take a look.
What was a surprise for us in this 15th Global Fraud Survey was that fraud, bribery and corruption continues to be very topical and the highest risk. Nothing seems to have changed from 2012. In India, in fact, 40% of the people polled actually said that bribery and corruption is very prevalent. What was even more surprising was that 20% of the people actually said they don't mind paying cash to win some business unfavorably, which was a big surprise.
And this after demonetization?
Yes.
So it's had no impact?
Well, there's a rumor that there is some cash lying in the system till now. But the fact is that that was a big surprise for us, considering demonetization. Third one is that 16% of the people said that they don't mind actually taking shortcuts in case the business isn't doing so well. So if the business tightens up, they don't mind taking shortcuts. In fact, very interestingly, I found, we did a survey where we broke the number of people by age, so 35 and above and 35 and under. And what we found was that the people 35 and under were more actually okay in doing, you know, some unethical behavior to win business, or if they had a tough environment condition, to take shortcuts.
When you talk to government, whether it is at the center or the state, everybody tells you, look, everything is online, it's all digital, you get deemed approvals if needed. Then what are we talking about? I mean, how come speed money continues to be such a big issue today?
There are a lot of times that despite digitization, there is intervention at the physical, personal level. And that's where it still gets manipulated. So if you go down the stream, right at the grassroots level where this is supposed to be happening, even though it's digital, the system tends to go down at times. There is manipulation even within the system. And there is a lot of important discretionary decisions that are outside of the day-to-day online approvals and systems. And that's where the big-ticket corporate frauds are happening. So we're not talking about smaller approvals, which is more impacting day-to-day life, but we're talking about the bigger issues where there is discretion with the government. And that still continues to be offline, so today, and the decision-making is lying outside, so there is still manipulation.
Clearly, as the survey points out, there is a difference or a disconnect or a lag between policy action and actual change on the ground. What is the big surprise, if any, that the survey shows up for you?
I was actually surprised to see that the younger generation, right, as Arpinder just mentioned, that below 35, they are more likely to commit a fraud or do a bribe or take a shortcut than people above 35. So that was extremely surprising to me. Otherwise, I think it was more or less in line with what I expected. I did expect, of course, that there should be an improvement in the survey, which was a little surprising that there wasn't, although our ranking has improved. By and large, there's not been much improvement. So that was a little bit of a surprise. But really what surprised me was the younger lot of CEOs or younger lot of management willing to do the same thing. That was surprising to me.
And you can catch that entire conversation at 10 p.m. tonight only on CNBC TV18. And on that note, it is time for us to take a short break. But coming up, Wipro reports a big miss for the fourth quarter. Detailed analysis on the other side of this short break. Stay tuned. Welcome back. You're still with us on Reporter's Diary. On to the big earnings of the day. IT major Wipro has reported a weak set of numbers for its fourth quarter and missed street estimates. The IT services dollar revenue and EBIT margin failed to meet expectations, while guidance also disappointed expectations. Reema Tendulkar joins us now for an in-depth analysis. Reema, take it away.
Yes, very disappointing set of numbers from Wipro. Even the guidance for the coming quarter has come in much below street expectations, with the company guiding for negative growth in Q1. And this is at a time when most of the IT companies' commentary has improved, and they're talking about an acceleration in growth. Now, the stock has already been an underperformer. It's underperformed the IT index by nearly 27%. Quick run through of the numbers. Dollar revenue growth at 2.4% on a sequential basis. Margins have come in at 14.4%, but then there was an impact on account of a customer insolvency and impairment. That was to the tune of 208 crore. So if I adjust for that, I'm getting margins at 16% versus expectations of nearly 17.5%. So big miss. The Q4 constant currency growth at 1.1% would put it at the lower end of the company's guided band of 1 to 3%. But it's their Q1 guidance which has negatively surprised the street. Now, while we take into account that June is seasonally weak for Wipro, even then, no one on the street expected the company to guide for negative growth. Their guidance is minus 2.3% at the lower end to just 0.1% growth at the upper end. For yet another year, Wipro's growth has fallen short compared to that of peers. So for the full year, the company's constant currency growth is at 2.9%, lower than that of Infi, which is at 5.8%, and lower than that of TCS, which is at 6.7%. So the key is, when does the company get back? When does the company's growth rates converge with that of the industry? For now, very disappointing set of numbers and the guidance.
So very disappointing set from Wipro there. Thank you so much for all those details, Reema. The Maharashtra government cleared Mumbai's long-pending development plan yesterday. The blueprint will pave the way for the maximum city to have more land available for building homes and commercial spaces. Remember, an earlier version of the development plan was released in 2015, a few months after the BJP Sena government taking charge in Maharashtra. The plan, however, faced criticism from several NGOs and activists over some key aspects. Manisha Natarajan joins us now. Manisha, the revised plan finally getting the government's approval. Take us through some of the key highlights.
Well, indeed, it is a big day for Mumbai with the Mumbai Development Plan 2034 being finalized by the government. Two things which come out strongly. A, the government is serious about creating an affordable housing stock, which it has failed to do so far with either slum redevelopment or bringing down land prices in the city. Now, in the DP, it's proposed that 2,100 hectares of no development zone will be released for affordable housing, plus 330 hectares of salt pans will also be made available to create affordable housing. While this is lower than what was being anticipated, a release of 3,700 hectares is still quite a substantial amount or number for the island city. What's even more important is that FSI norms have now been increased. FSI for commercial has gone up to 5 from the current 2.66. FSI for residential has increased from 1.33 to 3. The municipal commissioner at the press conference announced that the new Mumbai DP intends to ensure that the city creates 8 million new jobs by 2034. In fact, 2 decades ago, the city had taken a decision to move commerce out to the suburbs and perhaps lost out to cities like Bengaluru for best in IT and office spaces. So this is a move which will be welcomed a lot by top developers like Raheja, Godrej, Hiranandani, etc. A critical point to note is that eco-sensitive zones, the mangrove areas specifically, have been earmarked as natural resources and will not be open to construction. RA Colony has also been preserved. The final plan, of course, will be kept open for a few more weeks for public suggestions or any big flaws to be pointed out. But most important to note is that there is skepticism amongst urban planners who have said that the release of land will not be sufficient to create affordable housing stock. The government has empty coffers as of now, so who really will make these houses is the big question. Back to you.
Absolutely. Thank you so much for taking us through those details, Manisha. On that note, it is time for us to take another short break. But when we come back, a special report from pole-bound Karnataka, where silk prices have become a key issue in some constituencies. Those details on the other side. Stay tuned. Welcome back to Reporter's Diary. Accounting for 49% of India's raw silk production, Ramnagara in Karnataka is the country's silk production hub. But the silk industry here is not happy with the reduction of import duty on Chinese silk. Prices in the market have come crashing down. As part of our special series on the Karnataka elections, CNBC TV18's Rukmini Rao and Archana Shukla report on the economic issues which will count across Karnataka.
Ramnagara, on the outskirts of Bengaluru, is home to 30,000 families whose livelihoods depend on silk farming and allied activities. But the economy here is hurting. A reduction in the import duty on Chinese silk has meant that farmers here have lost their pricing power.
I'm at the sericulture hub of Karnataka here in Ramnagara, one of the biggest auction houses, as you can see, where business of close to 2 crores takes place on a daily basis, and farmers come here to auction off their cocoons.
If our farmers prosper, the nation will also prosper. When our farmers are growing enough, they should stop importing silk from China. We have the ability to grow how much ever needed. Farmers here must be supported to grow more.
Ramnagara is a stronghold of the JDS and is also one of the constituencies from where its chief ministerial candidate H.D. Kumaraswamy is fighting the election. He is also contesting from the neighbouring Channapatna, which also happens to be a sericulture hub. Kumaraswamy is promising schemes and packages worth over 20,000 crore rupees for the welfare of silk farmers. The party in power, the Congress, doesn't want to be left behind. The recently announced state budget promised a 6% rise in outlay for sericulture and related activities. It has also proposed setting up a state silk development center and a silk museum to give silk-driven tourism a boost, Kisan nursery scheme to encourage cultivation of mulberry trees, and providing subsidies amounting to nearly 90% of the cost of cultivating these trees. Farmers say that while some of these schemes have helped, it is not nearly enough.
The government is giving sericulture equipment under subsidy. However, the 50 rupees bonus that they used to provide has been stopped, and we want the government to bring it back.
50% ಮಾಡಿದೆ ಇನ್ನು 50% ಮಾಡಬೇಕು ಈಗ ರೇಷ್ಮೆಗೆ 50 ರೂಪಾಯಿ ಸಬ್ಸಿಡಿ
A lot of benefits have been taken away. Farmers are not getting much.
ಸ್ವಲ್ಪ ಕಡಿಮೆ ಆಗ್ತಾ ಇದ್ದಾರೆ ರೈಟ್ ಇಲ್ಲ ಅನ್ಬಿಟ್ಟು ಈಗ ಒಂದು ಸ್ವಲ್ಪ ರೈಟ್ ಐತೆ ಹಿಂಗೆ ಇದು ಮಾಡಿದ್ರೆ ಉತ್ತೇಜನ ಕೊಡಬೇಕು ಮೇಡಮ್
ಸಿದ್ದರಾಮಯ್ಯ ಸರ್ಕಾರದಿಂದ ಜನರಲಿ ತಾವು ಸಂತೋಷವಾಗಿದ್ದೀರಾ ಇಲ್ವಾ
ಖಂಡಿತವಾಗ್ಲೂ ಇಲ್ಲ ಮೇಡಮ್ ಏನೋ ಬೋನಸ್ ಸ್ಟಾಪ್ ಮಾಡಿದ್ರಲ್ಲ ಇಲಾಖೆ ಸೀಮಿತ ಅಷ್ಟೇ ಸರ್ಕಾರ ಸಿದ್ದರಾಮಯ್ಯ ಯಾರ ಮನೆಗೂ ತಾವು ಕೊಟ್ಟಿಲ್ಲ ಬೇರೆ ಸರ್ಕಾರ
Schemes are not reaching the end farmers.
Well, the farmers do agree that several of the government schemes have benefited them, but their problems are far from being solved to an extent that they expected.
The fact that this constituency gave H.D. Kumaraswamy the thumbs up in the 2013 elections, and as chief ministerial candidate from JDS this time, the expectations that he will deliver if he wins are a lot higher. With Rukmini Rao in Ramnagar, in Mumbai, Archana Shukla.
That's the latest from poll-bound Karnataka. But with that, it is a wrap on this edition of Reporter's Diary. Up next is Urban Reality. Stay tuned to CNBC TV18.